AAPL Full Master Breakdown. Friday, May 8th, 2026. Like and subscribe. The $1 Investor. Remember, I'm not your financial advisor. I'm just a blue-collar working bus driver who found the formula to getting wealthy $1 at a time. I can only offer you a drink of water. It's up to you to know if you're thirsty enough for it. Apple is company number 4 in my YouTube portfolio. Ticker symbol AAPL. This is another one of those companies that makes me think about time. Because if somebody had put just $1,000 into Apple back in the late 1980s and actually held it through the splits, the crashes, the bad years, the good years, the iPod, the iPhone, the App Store, the Mac, the services business, and everything Apple became, that small investment could have turned into life-changing money. That is what time does when it is attached to the right company, and that is the part people miss. They look at $1 a day and say, that is nothing. But I do not see it that way. I see every dollar like an employee. I send that dollar to work, and if I keep sending $1 every trading day for the next 20 years, that $1 does not stay $1. It buys ownership, it buys shares, it buys time, it buys compounding, and eventually, it buys freedom. According to my screenshot, I currently own 0.096162 shares of Apple. My market value is $27.64. My average cost is $259.98. My portfolio diversity is 0.72%. My return today is positive $0.3096 or positive 1.13%. My total return is positive $2.64 or positive 10.55%. And my recurring investment is $1 every single day. That is how I build now. I am not trying to time Apple. I am not trying to guess the perfect entry. I am not trying to trade in and out like I did years ago. I am trying to accumulate, $1 at a time. Over the last 5 years, Apple has gone from being seen as mostly an iPhone company to being one of the strongest ecosystem companies on Earth. In fiscal 2025, Apple reported total net sales of $416.161 billion, with iPhone sales at $209.586 billion, and services revenue at $109.158 billion. Services grew 14% from the prior year, driven by advertising, the App Store, and cloud services. That services number matters because Apple is no longer only about hardware replacement cycles. Apple is hardware plus software plus subscriptions plus cloud plus payments plus App Store plus music plus TV plus storage plus warranty plus advertising. That is the machine. That is what Wall Street respects. Then Apple came out in the March quarter of fiscal 2026 and reported quarterly revenue of $111.2 billion, up 17% year over year, with diluted earnings per share of $2.01, up 22% year over year. Apple also said services revenue reached a new all-time high. So when people say Apple is dead, I do not see dead. I see mature. There is a difference. Apple may not be the fastest growing company anymore, but Apple is one of the strongest cash flow machines ever built. The bull case is simple. Apple still owns one of the strongest consumer ecosystems in the world. The iPhone is the center. Around that center, Apple attaches the Watch, AirPods, Mac, iPad, services, Apple Pay, App Store, iCloud, subscriptions, and now artificial intelligence features. If Apple can make AI useful inside the products people already own, then it does not need to win the AI hype war the same way other companies do. It just needs to make AI useful to its installed base. The middle case is that Apple keeps growing slowly, keeps buying back stock, keeps raising dividends, keeps expanding services, but the stock does not explode because growth is mature and expectations are already high. The bearish case is that Apple falls behind in AI, iPhone growth slows, China stays difficult, regulators keep attacking the App Store, and investors decide the valuation is too expensive for a slower growth company. Wall Street is not fully united on Apple, but it is still mostly positive. MarketBeat showed 35 analysts with an average 12-month price target of about $304.31, with the highest target at $350 and the lowest at $200. Public's analyst summary showed 28 analysts with a buy consensus and a 2026 price prediction around $295.23. So Wall Street is basically saying Apple is still high quality. Apple is still profitable, Apple is still powerful, but Apple has to prove the next growth wave. And that next growth wave is probably services, AI integration, wearables, health, payments, and whatever new hardware category comes next. My bottom line is simple. Apple is not a lottery ticket. Apple is a foundation company. It is one of those companies I want my daughters to inherit because the business is built around habit, loyalty, brand, cash flow, and ecosystem control. This is not about buying one share fast. This is about putting $1 to work every single day, because money sitting in the bank earning almost nothing is asleep. Money inside great companies is working, and I would rather have my dollars working than sitting idle while inflation eats them alive. Today I want to talk about the fourth individual company that I buy every single day inside my YouTube portfolio. Apple, ticker symbol AAPL. And this company right here is one of those names that makes you respect time, because Apple has been around for decades. This is not some new hype stock. This is not some meme company. This is not some internet pump. This is one of the greatest wealth-building companies in stock market history. And when I think about Apple, I always think about this. Imagine putting $1,000 into Apple in the late 1980s and just leaving it alone. Imagine not touching it. Imagine not panicking. Imagine not selling because the market got ugly. Imagine not thinking you were smart because you made a little profit. Just holding. Through the hard years, through the boring years, through the comeback, through the iPod, through the iPhone, through the App Store, through the services business, through all the stock splits. That is how small money turns into serious money. Not overnight, not in 1 week, not in 1 month, over time. That is the part most people do not understand. They see me buying $1 every day, and they laugh. They think it is too small. They think it does not matter. They look at Apple trading around the high 200s and say, it is going to take almost a year just to get 1 share. And they are right. That is one way to look at it. But that is not how I look at it. I do not see $1 as nothing. I see $1 as an employee. Every single dollar I invest gets sent to work. That dollar goes into a company. That company goes into my portfolio. That portfolio goes into my legacy. And over 20 years, those little dollars start becoming something people cannot ignore. That is the whole formula. $1 every day into great companies, with time, with discipline, with patience. According to my screenshot, I currently own 0.096162 shares of Apple. My market value is $27.64. My average cost is $259.98. My portfolio diversity is 0.72%. My return today is positive $0.3096 or positive 1.13%. My total return is positive $2.64 or positive 10.55%. And my recurring investment is $1 every single day. That is how I build. Small, automatic, consistent, no drama, no guessing, no trying to be cute. Now let's talk about what Apple really is. Most people think Apple is just the iPhone. And yes, the iPhone is still the monster. In fiscal 2025, Apple did over $209 billion in iPhone sales alone. That is bigger than entire companies. But Apple is not just iPhone anymore. Apple is an ecosystem. Apple is the iPhone. Apple is the Mac. Apple is the iPad. Apple is the Apple Watch. Apple is AirPods. Apple is services. Apple is iCloud. Apple is the App Store. Apple is Apple Music. Apple is Apple TV. Apple is Apple Pay. Apple is advertising. Apple is health. Apple is privacy. Apple is brand loyalty. Apple is a system that people enter and rarely want to leave. That is why Apple is so powerful. Once somebody owns the phone, then they get the watch, then they get the AirPods, then they get the cloud storage, then they get the subscription, then they get the Mac, then they use Apple Pay, then they buy apps, then they are inside the ecosystem. That is not just product sales, that is customer lock-in, that is habit, that is loyalty, that is power. Over the last 5 years, Apple has continued proving that it is not just a hardware company. The big shift has been services. In fiscal 2025, Apple reported over $416 billion in total net sales. Services revenue was over $109 billion. That services business grew 14% from the prior year. That matters because services are usually higher margin than hardware. So when Apple grows services, it makes the entire business stronger. Then, in the March quarter of fiscal 2026, Apple reported $111.2 billion in revenue. That was up 17% year over year. Earnings per share were $2.01. That was up 22%. Services hit a new all-time high. So when people say Apple is finished, I do not see finished. I see a mature monster. There is a difference. Apple may not grow like a tiny company anymore, but Apple does not need to be tiny. Apple is already one of the largest and most profitable companies in the world. The question now is not whether Apple survives. The question is, what is Apple's next engine? And that is where the debate begins. Wall Street likes Apple, but Wall Street also wants proof. Analysts are mostly positive but not blind. They like the iPhone strength. They like services. They like the margin profile. They like the buybacks. They like the dividend growth. They like the ecosystem. But they also worry about AI. That is the big question. Can Apple become a serious AI player? Can Apple integrate artificial intelligence into the iPhone, Siri, apps, health, wearables, and the entire ecosystem? Can Apple make AI useful for regular people instead of just making it a Wall Street buzzword? That is where Apple has a chance. Apple does not need to be the loudest AI company. Apple needs to make AI invisible and useful. That is what Apple does best. They usually do not invent the category first. They polish it, they simplify it, they package it, they make regular people use it. That is what they did with smartphones. That is what they did with tablets. That is what they did with wearables. That is what they may need to do with artificial intelligence. But there are risks. I am not going to lie. Apple has real risks. The first risk is slower iPhone growth. The iPhone is massive, but it is mature. The second risk is China. Apple still depends heavily on global supply chains and international demand. The third risk is regulation. Governments are attacking App Store power, fees, and platform control. The fourth risk is artificial intelligence. If Apple moves too slowly, investors may punish the stock. The fifth risk is valuation. When a company is already huge, Wall Street demands execution. Good is not always enough. Sometimes Apple has to be great just to justify the price. That is why I do not go all in. I dollar cost average. I buy $1 at a time. I let price movement work for me instead of scaring me. If Apple falls, my $1 buys more. If Apple rises, my portfolio goes up. That is the beauty of the system. Now let me talk about the next 5 years. I see 3 roads. Road number 1 is the bullish road. Apple keeps growing services. The iPhone stays strong. AI becomes deeply integrated into Apple devices. Wearables and health keep expanding. Apple Pay and financial services keep growing. The company keeps buying back stock. The dividend keeps rising. And Apple remains one of the strongest companies on earth. In that world, Apple can continue compounding. Road number 2 is the middle road. Apple keeps growing, but slowly. Services keep carrying the business. iPhone stays steady. AI helps, but does not explode. The stock moves up over time, but not in a straight line. That is probably the most realistic road. Road number 3 is the bearish road. iPhone growth stalls. China gets harder. Regulation hurts the App Store. AI competitors move faster. Margins get pressured. And Wall Street decides Apple deserves a lower valuation. That can happen. That is why discipline matters. But for me, Apple still belongs in the portfolio. Because Apple is not just a company. Apple is habit. Apple is brand. Apple is cash flow. Apple is loyalty. Apple is one of the strongest consumer ecosystems ever built. And I want my daughters to inherit pieces of companies like this. That is why I am doing this. I am not building this YouTube portfolio for entertainment. I am building it as a record. I am building it as a lesson. I am building it as proof. I am building it as inheritance. When I turn 70, I want these assets divided between my 3 daughters. I want them to inherit ownership, not debt. Not excuses, not liabilities, ownership, because I do not work to pay car payments. I do not work to buy stupid things. I do not work to impress people. I do not work so my money can sit in a bank earning almost nothing while inflation eats it alive. I work so my money can go out and make more money, then that money can go out and make more money again. That is the machine. That is the formula. And Apple is another employee inside that machine. $1 every day, 5 trading days a week. For the next 20 years, that is how I build. That is how I accumulate. That is how I leave something behind. Like and subscribe. The $1 investor. Remember, I'm not a or your financial advisor. I'm just a blue-collar working bus driver who found the formula to getting wealthy $1 at a time. I can only offer you a drink of water. It's up to you to know if you're thirsty enough for it.